Now let's take a look at supply and demand. And supply and demand is different from support and resistance. And supply and demand shows the origin of very strong and very explosive price moves, whereas support and resistance always is at the origin of turning points. So supply and demand can fall in the same area as a support and resistance area. Usually they don't, but sometimes they can fall close together. So let's just mark a few supply and demand areas, and then it will become obvious what this is. So supply and demand always stand out pretty well because you can see here a very strong drop from this very small range, and you can see here this top here, it marked the beginning of this sudden drop. You can see the candle is very strong and very long. So the supply area in this case, where this area or where this drop started, is pretty obvious. We used the last swing to draw our supply zone in that case. So you can see here the last swing, here is the absolute high. Then here probably it started somewhere. And again, it's not important that you're 100% accurate, because again, we don't try and we don't trade blindly off of those levels, but we just use them as confirmation and confluence. We look for the areas where supply and demand line up, and then we wait until price gets there and shows us some type of transitioning period or transitioning pattern. So you can see in that case, price moved back into this supply area. We picked up new sellers. Here at this point, the seller imbalance was very high. There were much more sellers than buyers. And then once price came back into this area, we found new supply, and then we started this sell-off. And just to take a quick look, here's probably a very nice trend line. You can see a very accurate trend line. Then we broke it. We also then at this point started to make lower lows and lower highs, which is an important feature. And then we started this sell-off. So you can see how we can put that already together, although we are just at the beginning of this course and of this trading methodology, but you can see how this all fits together. Then let's take a look at another one. So here you can see prices coming from a very tiny range, very narrow price action, and then suddenly we shoot up. And even before that, we moved a little bit lower. So you can see this wick here. In some textbook, they call that a spring pattern, where you have an initial move against this following uptrend or this following explosive trade and trend. And you can see, let's just mark it. So we take the last few candles here, very tiny range. We expand that forward, and you can see here again that this transitioning period here falls into this demand area. You can see price came back into it. Even though we moved into this area very strongly, very major bearish candles, we found support here, and then eventually we started to sell off. If you remember, this is the flip here, where price goes from using this level as resistance, it then becomes support, and then it starts this rally. So again, we don't just wait until price gets here and then we just blindly buy it, but we look for very specific clues and signals that we then can use to form very high probability trades and signals. And in a later video we will put this all together, but you can see already how we can use all the different concepts to come up with very sophisticated trade ideas. And you can see that supply and demand comes in many different shapes and forms. So here we have a very long candle. This was a news driven spike and a news driven drop, but you can see we are coming from this very tiny range here. And let's just mark a rectangle around that, and you can see price barely touched it after we came into this area, and then we found new supply. We started to sell off, and then price completely reversed from going upwards here very strongly to then moving lower. And again, this origin here, this origin of this drop of this supply area helped us pinpoint and helped us find such an important key area where we then could have used our other tools to see if we can time such a trade. So let's look at a few more examples, and here we have a different kind of demand area. So here's probably also some type of short-term support or resistance. So let's mark the level here first as a resistance zone. You can see we have some type of reaction here. Let's look back and see if this level, here we overshot it a little bit, but that's not too bad. because we are not looking for support in this case. But here you can see that this rally here started off of this area, and so you can see that we don't have one huge candle, but you can see how price initially moved lower a little bit against the trend and then shot up immediately. It reversed, and this is a very important pattern. You can see that rally, consolidation, and rally, and we have here this little consolidation, which is part of resistance and part of supply. And you can see that here price moved into this area. We did not find support immediately. We tried to make a run here at this area. If we are careful, we can even draw here our zone, and in the previous video we learned what support and resistance zones are. So you can see there are two levels on top of each other, this one and this one, and then here we overshot this level. This is the trading pattern that we will learn in the third module. This is called the trap or the squeeze pattern, and then it foreshadowed this upside reversal. And you can see even in the future this level then acted as support and resistance as well. So interesting level to have. And you can see how we can combine the concepts of resistance and supply and demand to find those key price areas where price has a good chance of reversing, and that's then how we can use that going forward. Let's look at two more examples maybe. So here we have a very similar pattern. You can see a rally, then this little consolidation, and then we continue the rally. And here again we have a small consolidation, a very narrow range, which is then our supply or demand in this case. So we draw our rectangle around this, take the high and the low here, and you can see price dipped into it. We immediately find new demand. The buyers are stepping in and we're driving price higher, and that's another sign how this supply area or this demand area can help us find key price areas. In this case we probably don't have a nice transitioning signal, but you can see if we go into our next modules that we can use the knowledge of supply and demand also to time our trade exits. Once we're in a trade, we can use that information to time or to place our targets and then to take profits on our trades. So here is another one. You can see that we are coming from a rally, small consolidation, and then we have this explosive move out of this area. So we can draw our support and our demand area here, and you can see again we dip into this area. This time we probably even have some type of left shoulder, the head, and the right shoulder. You can see those swing points. Then we have this break here that we will go into later in the next videos, and then we have this upside reversal. And you can see again that this demand area helped us to find such an important turning point, and then we can combine that with our other tools to time our trades. And let's take a look at the final example, a different form and a different shape. So here you can see again the same pattern, rally, then little consolidation, and then this explosive move here away from this area. And here is another spring pattern. You can see we traded sideways, then we made this initial move lower, which probably looked to a lot of people as we were moving down, but we reversed on the spot. This then created our demand area. Let's just take this area and expand it forward. So let's scroll a little bit and see where this lines up. So you can see here, if we zoom out a little bit, that price found here support a few times. You can see each time we moved a little bit lower, and then eventually we rallied higher off this area. So a key area here again, if we are short from this market top, which is actually a head and shoulders, left shoulder, head, right shoulder, there's probably also some type of trend line here, depending on how we draw that. And so you can see if we are short here from this area, we can use this information to get out of a trade and to take our profits. There is probably also some type of smaller demand area in this case. Although you can see here we had the rally, we had this consolidation which was much stronger than what we had here, and that's a good example that the longer such a consolidation between those explosive moves are, then the worse the demand area is. You can see that here not a good demand area, and here then we overshot that. We don't get a very good reaction. So if you have a long consolidation here that goes against the trend direction, it is usually not a good demand area. We just want to see that price spends a little time there and then shoots up. So in this case, that's the main demand area, and you can see here how price nicely turns then from going lower to eventually making higher highs and then rallying. And that's the introduction to supply and demand. You can see it's a little different from support and resistance. It's also a little bit different from how we use it. And it is a good tool to add to our toolbox because it can help us make sense of price, and we can pinpoint important key price areas with it as well. And again, thank you for watching. If you have any questions, just go over to our forum, post your charts, and we always provide you feedback about specific charts, specific setups. So if you are unsure about a specific supply and demand area in this case, just post a screenshot and we will help you get a better understanding about the different tools and concepts step by step. Thank you for watching and see you in the next video.